Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh my gosh. Wait. Am I? Oh, I'm so stupid. Let's fix that. I need to get better at the beginning thing here. You know what happened was I was reading a little post there about spoofing. Anyways, it's Friday. Do have some stuff coming up here in about 5 minutes, don't we? Yes, U.S. S&P manufacturing PMI and ISM manufacturing PMI at 8 o'clock. This is a pretty significant number. And we're back into like manufacturing PMI has been negative for a very long time, and that was kind of one of the things that was making us say like, it kind of looks like we're going into a recession sort of a thing, right? Well, we have gotten some manufacturing numbers recently that looked kind of positive, and you had like the Chicago PMI yesterday looked really good, right? So there is a chance that ISM is higher than anticipated, that it could be an expansion, and you see the market throw a fit again. Also, kind of didn't really pay attention. Well, we got to go back over here now. Let's go to the charts. I'm getting ahead of myself. So here in the treasuries, into the close, there was like some massive buying. So it was like sell all day and then into close some massive buying. So that must have been end of month rebalancing. Did not anticipate there to be a huge rebalancing this month, but there was, and it was a buy. So now that those buyers are out of the way, if we get something that pushes, that is kind of hawkish and pushes interest rates back up, I think we could see, an ugly sell here. But we'll see. We got about 2 minutes. I'll make sure that I have the news squawk on. Okay. S&P 500 also kind of doing some funky things. Big sell and then like revert back up. So the volatility compression, whatever you want to call it, is just insane right now. And it seems to me like the trade is whatever will result in the open to close difference being the smallest is the trade that you should make towards the end of the day. Oil, man, oh man, oil dropped like what, $4? I was, playing a swing trade yesterday with it. Trying to do some degenerate gambling with it. I stopped out of it. It was this, what should have been really bullish news ended up being bearish because basically nobody thinks that OPEC is actually going to follow through. So that one was a wild, but yeah, oil just got destroyed. All right. Gold and silver still holding their gains from earlier in the month, and copper doing okay. Bitcoin seeing a bit of a spike overnight, but coming back not quite to 40K yet. 40K kind of being a critical area, right? And we come back over here and you can see the dollar a little bit higher. We're at 103.4, whereas yesterday we were kind of pushing 103. But look, overnight we kind of did push 103 for a little bit. We were below 103, so dollar probably going to continue to be a major factor here, right? All right, so news squawk a little loud for me there. 10 seconds for Canadian numbers. Those aren't as big of a deal, but these PMIs are a big deal, right? Now, I kind of wonder Okay, so there's the Canadian numbers, and the market not really reacting too much to it. I kind of wonder where things go with the volatility from here, because it always kind of turns into one of these things that like can't go on forever, and you know that when it ends that it's going to be like a real crazy, you know, this is listen, I'm traumatized, okay? It's an ADHD thing, doula, it encodes that shit, right? That volatility spike in February of 2018 was absolutely insane. That, to me, was crazier than the COVID market. When the COVID market happened, I kind of thought this was all stupid. But that was scary. Man, it was just like overnight, all the liquidity in the treasuries disappeared, and we were just moving like there was literally like 100 or 200 contracts per price. It was just nuts. That was a wild market, man. That was a wild market. And it came from traders selling volatility every day, that trade getting too big and blowing up. So now that we're getting into that low volatility, sell volatility kind of regime, kind of puts that scenario on the table again. It kind of scares me. Especially if you get something like we sell volatility and then all of a sudden they realize, oh no, the economy is screwed, right? That could be really ugly. But if that happens, it won't be for a while. I mean, we got at least a month. It's not going to happen in December. How much time do we got here left? Let's look at the month. Okay, so so Christmas is on a Monday this year. And we basically get 3 weeks. Gotcha. I have to go and look at how to deal with that with budgeting and so forth. All right. Oh, is there a Powell meeting today? Let's see here. Yes, you know what? Sometimes I make this mistake. I don't look further ahead. Okay, so at the close, well, about the time that I usually shut the stream down, we will have Powell doing a fireside chat. That's a pretty big deal. So that means probably Seth not taking any trades this morning, right? Because, well, that was an odd little drop there. Just, you know, some stop outs because you saw some orders almost immediately hit at 29. So maybe I'm wrong. Maybe there's something going on. Here, what am I seeing in the delta? The deltas are kind of mixed. Spread has been moving. Maybe a flattener again. Okay, let's read. Zero Hedge has a story about the ISM that we need to raid. U.S. boat sales set to sink the decade low. I can't imagine. You know, a lot of people in Utah own boats. I just, not my thing. It seems like a huge burden. I wanted to read, they had a story about oil I wanted to read. You'd be shocked how large their positions are. This is probably talking about CTAs. Proposed ATF rule to restrict gun sales. What does this be? Did any of you guys watch the Gavin Newsom versus Ron DeSantis debate last night? Oh my gosh. That was such a zoo. I was like, am I really watching this? Oh my gosh. It was such a bizarre debate. And then at the very end, let me explain how this debate went. Okay. So it was a debate on Sean Hannity's show. So Sean Hannity was the moderator. Apparently Hannity and Newsom are friends or something. Okay. But like Sean didn't make any attempt whatsoever to try and be a neutral moderator. Okay. It was basically like, okay, there's a lot of stats that make California look bad. How does Gavin handle or explain away these statistics, right? So the debate basically was like, hey, Gavin, why does your state suck so much? And then Gavin would be like, oh, no, it doesn't. Here's another stat that has absolutely nothing to do with what you're talking about that actually makes me look good. So it would be like crime in California is significantly higher than in other states. And then he'd say, but crime is at a 40-year low or something like that. But, well, yeah, but it's increasing over there and it's way worse than other places. And the stores over there are, you know, like locking everything up and you have to like scan yourself to get into the store and all this crazy stuff. And Gavin would just like not address it. It was always like, I'll answer that question, but first, guys, so wild. That was the debate. And they were very mean to each other too, by the way. They were so insulting to each other, talked over each other a lot. It was wild. And man, see, now I don't even know what got me on this subject, what it was that I was going to bring it back to, but man, what a debate. It was so crazy. I don't think that you'll probably hear too much about it because, like, honestly, listen, I'm a conservative, obviously. In my political analysis, I've tried to be even-handed in as much as my analysis is mostly about trying to find things that might help us in our trading and understanding what's going on in politics altogether, right? But in this case, it's really hard to be neutral because Newsom just got bodied, man. I think he looked so poor. And here's the thing that he was doing that I think really, really hurt him. And you can tell that like Ron DeSantis has been preparing because he's been doing debates, the Republican debates. He's very polished and prepared for national debates. And Newsom is not. He was just winging it. Okay. What would happen is they would say, here is a statistic. And then Newsom would say, well, I'm going to answer that question, but first I want to talk about this, right? Terrible strategy. If you're ever running for president, okay, terrible strategy. Watch how Donald Trump does it. The way that Donald Trump does it, he answers the question in one short, succinct, funny sentence. Okay. The problem that you have is if they ask you a question and then you don't answer it right away, everybody at home is basically like, oh, but you didn't answer the question. You didn't answer. They don't listen to a thing that you said because you didn't answer the question. They're still waiting for you to answer the question, right? And the thing is, people pick up on this so quickly. Once you understand this easy kind of model on how to look at these sorts of things, you'll see it, and you'll see how people intuitively understand this. It's pretty wild, okay? And what is it? People use the argument that they think is the most effective first. So, if the argument that you think is most effective is to change the subject, what is that saying? Right? It doesn't look good. See, if I was in a debate like that, of course, I wouldn't be arguing Newsom's position, but the thing that I would be trying to say is like, okay, here's the statistic that you just gave. Here's why that particular statistic does not give you an accurate picture of what is actually going on. And here is why this other statistic gives a better picture and is more accurate and more fair, right? Like, well, my state is really big. Like, we'll have a higher crime rate because we're larger population, for instance. Something like that. But he doesn't do that. He doesn't do that. The picture that I got of Gavin Newsom was of a leader that is not actually leading, right? Like, he's there because he wants the power, because he likes his ideas, he likes himself, but he does not actually like the job, right? When Ron DeSantis, you can tell he likes being governor. Like, when an issue comes up that he knows about, he gets passionate. He gets fired up. He's like, no, that's not what happened. This is what happened. Here's what we did. He knows what they did, you know? If there's, like, I think a good example is the one where they're like, you opposed fracking. Well, yeah, he opposed fracking in the Everglades. Okay, listen, I live in Utah. It's just Badlands. I frack all the F you want. I don't care. It's just desert. There's nothing out there. But the Everglades? That's dangerous. You don't do that there, right? He knows. And every time they try and bring this up, oh, you supported fracking. He knows what he did. You know, he gets fired up about it, right? But then when it's Gavin Newsom's chance to talk about it, he doesn't talk about like what they were doing or any of that. It's like he doesn't know. It's like he doesn't know these statistics that Sean Hannity is putting up on the screen enough to even explain it. It was absolutely wild and unreal. We're talking about the Gavin Newsom versus Ron DeSantis debate last night. Oh my gosh. I don't think that you're going to hear too much about it today because Gavin Newsom just did so poorly. I mean, like, the deck was stacked against him. Like, this is the thing. The deck was stacked against him. It was basically 2-on-1 because Sean Hannity was not fair at all. And the whole thing was, here's the statistic. Explain that. And then Gavin Newsom doing everything that he can to not say anything about that statistic, right? It was a terrible, terrible strategy. But it bothers me. I guess kind of the reason why I wanted to talk about it today was because I see this problem across the West. It really, really bothers me. And it is that we have leaders that are terrible leaders. They're people that because of their ego or whatever would I like to be president? Sure. I like my ideas. I like talking about obviously, because I talk about it here on the stream, right? Like, I kind of like my view of the world, right? But I don't think that I would be very good in an executive position like, running a state. Maybe running a business, but running a state, probably not. I don't think I would enjoy that, right? So I don't do the job. But these people, they have the ego and they do that. And they're there in the job and they're not actually doing the job. Like, if you are a politician or you are a governor, like, you should know those statistics. You should know all of those statistics, and you should know enough about those statistics and what the reality on the ground is to be able to explain the situation to people. Because turning it into, well, here's my statistic and here's your statistic and who's really actually telling the truth is like just a terrible way to approach it, I think. You should be able to explain it. You should be the expert on all of that data because that's your effing job. And he couldn't do it. And I see leaders like that. Like Joe Biden would be the same way, right? I watch if we get a debate that's between Biden and Trump, which will be pretty wild because it kind of seems like they're both kind of losing their sharpness. But I bet you see the same thing. So, interesting debate. I don't think that too many, the left will not want to talk about it. The right, they didn't have too many great moments. But it is interesting to watch if you want to know how to look at debates and kind of what's going on that may help you in understanding the world. I need to blow my nose here. fully expect Newsom to be airdropped to replace Biden in 2024, though. So they actually brought that up in the debate, and Newsom was very adamant that he was not running a shadow campaign. I think he's genuine. I think that Newsom is a guy that really just thinks way too highly of himself, and he wants to be in the spotlight, and he wants to talk, even though he doesn't really know what he's talking about. Like, he was not prepared for that debate at all. I think that he genuinely just thinks that him being on that stage helps the Democrats, even though I really don't think it does. And I think that he genuinely is just all on board with what Biden and Harris have been doing, which is pretty... I don't like what they've been doing. But, yeah, I don't think the airdrop is going to happen, man. If it is, it's not going to be Newsom. I think you got to be a Democrat watching that debate and being like, oh my gosh, Newsom would be such a disaster. Because me, the big thing that I'm saying is basically like, he would make a terrible president. So you kind of got this interesting, because there's a little bit of a difference between the parties on this sort of a thing. But like, if we were just to look at Newsom being, like if it was Newsom versus DeSantis, for instance, right? The issue that you get here is that the Republicans believe things that are stupid, and the Democrats are not really there to lead, right? So when I say that, and I have to think about what is the things that, well, so for instance, they don't really want to support our allies abroad. Like, I'm concerned about Taiwan getting invaded, for instance. I'm a little concerned that even the Republicans might not completely support our ally in the way that they should, because they already want to abandon Ukraine. And some of these people that are far right aren't even supporting Israel. They say Hamas is terrible and everything, but they don't want to give money to Israel. Like, their big issue is foreign aid. Problem is that foreign aid is like trivial, right? Our budget problems are because of entitlements, not because of foreign aid in the military. But I digress. There are many economic issues. They want to get rid of the Federal Reserve. There's a number of things where Republicans are more ideological. And so in situations where their ideology conflicts with reality, they go with their ideology. And so you get Republicans that want certain policies that are just completely at odds with reality, versus the Democrats. They want certain things to happen. So they want change. And so they want to change things that they can't back up. And they're not smart enough to realize when it's not working for them. So they double down on that. And the reality is that they don't actually want to govern. They want to create change, but they don't actually want to govern. Right? Obama, I think, kind of enjoyed governing. But Biden doesn't. Biden's not a real executive. It's not. So if I was a Democrat watching that debate, and I'm talking like, the movers and shakers that donate the money and things like that, I would be looking at that and saying like, this guy cannot be a serious executive. Now, of course, you could get to convention and they switch over, and then if they ask him, and probably I think he would say yes. But I really think he's being genuine when he says that he's not intending to run a shadow campaign, that he has a big ego. And I think that it's pretty hard to rock the boat. Like, that's the problem, is that Biden is the incumbent, and that gives you a lot of power. And so if he says, I'm going to run again, he's going to run again. They're not going to stop him. I don't think so. In fact, I dare say I think there is a greater chance of Donald Trump being replaced as the nominee than there is of Joe Biden being replaced as the nominee. But I don't know. The whole thing is wild that we'll be going back in and it's going to be Trump versus Biden again is pretty wild. And I guess a little disappointing to me, but. It was interesting. If you're into politics like that, I'd go watch it, but probably most people won't be interested in it. And don't waste your time. So here was the thing that was the wildest part of it, okay? This thing was like 3 hours. Like I totally forgot about it. My phone reminded me, oh, they have a debate at 6. Okay, better go find it. I could only find liberal places on YouTube to watch it. But the place that I saw, he just watched, he didn't talk over it, so it was fine. I endured like 2.5 hours of this stuff, right? And then Sean Hannity has the last 20 minutes reserved for his show to do like analysis and talk with people and stuff like that, right? And at the very end, Sean Hannity's like, did you enjoy this? You want to do this again? And Newsom was like, oh, this was great. We should just keep going. Do you guys want to debate for another 20 minutes? I'm like, what? No! I can't handle another 20 minutes of this. Are you kidding me? This is like an absolute shit show. Newsom is doing terrible, and he wants to extend it another 20 minutes? What? Are you kidding me? I'm like, is this happening? It didn't seem real. But then they went to a commercial break and they didn't actually extend it. After the commercial break, both parties actually realized that they had other obligations or something and they didn't extend the debate. But he wanted to extend the debate. That was the thing that was the craziest about it. Oh my gosh. It was crazy. So that's the thing that you might hear about this morning. Okay, so looking at the market here, there has been a little bit of selling here after that Canadian news. I'm not seeing a significant change in cumulative delta in the treasuries. So we definitely look like we're kind of in wait and see mode when we get these PMIs in about an hour. So I would expect the market to be a little bit, well, I don't know if I'm going to say it's going to be range bound, but I think that you're going to see pretty iffy volume. So far, I mean, they are coming down, so they may be following correlations to Japanese yen is kind of selling again this morning. They're not to their lows, but it's on the sell here on this place, so. We will see. I guess I'll reset things so that we can see when I said that. While we're talking politics, if Trump wins next year, will his retribution match or exceed the injustices he's endured? I would hope not. I would hope that he takes the opportunity to, obviously, if like the law was broken or you have a legitimate case on an abuse or something, that should be prosecuted. But like literally abusing the law to go after your opponents on really shady, questionable legal theories and so forth, like the Biden administration has been doing, I really hope we get away from that, because that is so damaging to the country. I can only hope. I don't actually know if Donald Trump will do that or not. I think that the people on the right will definitely push him to do that. But he actually was pretty respectful of the power of the presidency. There was a number of situations where he should have pushed back hard against something, and he didn't. He just kind of sat there because he was too afraid that doing that would just piss him off more, What would he do in his second term? I don't know. Might not. Well, they just climbed back up there really fast. And the Japanese yen is following them, and gold is following them. That is very curious. We're not getting some like news I'm not hearing on the news squawk, am I? Well, and there's nothing on Twitter. Oh my gosh, Taylor Swift's publicist. That's interesting. So you might think, why does Seth care about Taylor Swift? That's stupid. Well, the thing that's interesting is there is a very, very strong media control campaign for Taylor Swift. It's probably the strongest out there. So when their publicist is starting to get into it with somebody, that means that they care about it. That's interesting. Fine, I'll install freaking white. Taylor Swift's longtime publicist slammed celebrity gossip account Dumoy late Thursday over anonymously sourced claims that Swift secretly married ex-boyfriend Joe Alwyn, calling for the gossip account to be held accountable for the lies it had spread about the pop star. That means it's probably true. It was a marriage, but was never made legal. Yeah, I think that it actually probably is true. That's funny. I think that if it was a lie, that they wouldn't go to that extent to push back against it. I'm just checking to make sure I'm not missing something. Eric Wallerstein, Fed officials aren't satisfied enough to declare an end to hikes, let alone to start discussing rate cuts, via the Wall Street Journal from Nick Timros. Yes, okay, so this is a good thing I forgot to mention. Overnight, the Wall Street Journal did have an article, basically, and they were going to say that, you know, obviously they're not going to increase rates in December. But I think that the message he's going to be giving to the markets is the next move is much more likely to be a hike than it is to be a decrease. What is the opposite word of hike? Decrease, hike and decrease doesn't seem correct. It seems like there's this word for what would be a rate decrease that I'm not using, that I'm always searching for, and it's not there. Oh, and I see Dennis in Discord saying that the curve is not doing much. At the moment, it's not, and that move up was across the board as well. Tumble, plummet? No, because it's not tumbling or plummet. It's just a 25 basis point decrease to the interest rate. When we increase interest rates 25 basis points, we call it a hike. So when we decrease, what do we call it? What is the opposite of a hike? Party time? Probably is what we should call it, huh? Synonyms, antonyms. A drop. A rate drop, that doesn't make sense. Rate drop, rate descent, rate decrease. I guess rate decrease is probably the most sensible word. Rate plop. Rate fall. a rate fall. Fall, lessen, lower, shrink, wane. See, the thing about the word hike is that hike is an active verb, right? Like hiking is something that you do to something. Whereas like a fall is something that happens to you, right? So we need an antonym to hike that is more active. That is, you are decreasing something. I guess you could call it a rate drop. It's just that I think part of the problem is that all of the words that we use for these sorts of things kind of have something to do with gravity. So when you say drop, you think about it coming all the way back down, right? Going all the way to the floor. Or rate repel. Well, for now, I'm going to go rate decrease, and I need to like ingrain that into my mind. Okay, we're much more likely to get a rate hike than we are to get a rate decrease. Need to use the word. I tell you what, so there's not such a word is not in the sorry, sometimes the stream like covers up. It is not in the spirit of the English. Language is an interesting thing. Like language is a really good example of one of these things where it's like, you know, we think of our minds, like everything relating to our minds, as happening on the astral plane. Right? I don't know. Maybe this is like an artifact of our cultural and religious history, right? We think that everything that goes on in your head, it happens in the spiritual or astral realm or something like that. And, you know, if you don't like what's going on in your head, you just change it. And the reality is actually like way more complicated than that. Your brain is this living organism, and changing it, you can influence it to change, but, you know, chemical processes and all sorts of things have to go on in order to do that. It takes time. And I think that language is a really good example of where this kind of comes into play, is that kids, they learn this stuff naturally. Their brain just picks up the pieces and puts it together and figures it out and makes the connections. And when you're an adult, if you want to do something like change the way that you speak or get better at presenting, etc., like it's not just like, okay, I'm going to speak better. You have to actually like practice it so that your brain makes those new connections. Same with trading. You need to change your trading. You're going to have to, you know, you're going to have some processes and so forth to kind of in the physical world to encourage your brain to make those changes. You say it's one of the reasons why English speaking countries are so. Why would you say that? It's definitely the case that your language seems to affect the way that you think. That's for sure. Good morning, Lucas. Well, Octavia said it will be a pause. Yeah, well, it will be. I mean, December will definitely be a pause, right? But the story from Nick Timmeros was that it will be a pause, but that he's also going to say that the next move, I mean, like, it'll be a pause and probably a pause for a while. But when they do actually move interest rates, it's more likely that they will increase them than that they will decrease them. Which is a huge contradiction to what the market is pricing in, right? The market is pricing in that they will start reducing interest rates sometime next year. And the Federal Reserve is saying, no, we're going to hold interest rates steady for a while, get inflation back to target, and then the economy will continue to be healthy and move up. And so then we'll have to raise interest rates again. So I guess what I'm saying is that you're probably in a little bit of a transition zone with the treasuries. We moved up really strong and really aggressively, and it was probably too quickly. That doesn't mean that the flows are all tilted to the downside today. Certainly, though, if we get something like this PMI is too strong or something like that. Well, let's read this Zero Hedge story about this, okay? This is authored by Simon White, Bloomberg macro strategist. A significant miss in the November manufacturing ISM released later today leaves stocks open to downside as overboughtness and less favorable liquidity conditions meet hard landing fears. The U.S. manufacturing ISM is one of the most consequential pieces of macroeconomic data for markets. It is the single largest explanatory factor for the performance of global stock markets. It is leading and it is minimally revised. Last month, it surprised to the downside, coming in at 46.7 versus the 49 expected. It is a volatile number, and last month's print could be just noise. Moreover, short-term leading indicators for the ISM, such as the new orders to inventory ratio, point to a continued rise in the headline index. Also, the manufacturing PMI is more stable and came in for November at 49.4. Nonetheless, ISM could surprise negatively again. Stocks would be exposed to more downside this time, as it would happen when they are significantly more overbought, after one of the best November performances on record, and when liquidity conditions are becoming less favorable. As discussed fully earlier this week, liquidity has been buoyant over the last month, principally due to the $200 billion rise in central bank reserves, money market funds de facto funding the fiscal deficit via the purchase of T-bills, and the government withdrawing funds from the Treasury account at the Federal Reserve combined to boost high-powered liquidity, driving a rally in stocks and bonds. But that impulse from reserves has started to fade. The 1 month change of Fed reserves is now falling. So the change of the change, okay, which translates as the absence of a tailwind for stocks. The expectation is the Fed will be able to cut rates as little as inflation softens, a typically Panglossian outlook for stocks. Wow, I've never seen that word been used before, which have rallied as bond yields have fallen. But a big drop in the ISM would amplify hard landing fears. Stocks in this case would be likely to sell off. Stocks in this case would be likely to sell off as falling bond yields start to reflect a Fed cutting rates to try to stem a recession, which stocks are very much not discounting. Okay, so this is interesting. So if the number is weaker than expected, he's saying that the bonds will buy very aggressively and stocks will fall, which is kind of the opposite of what I would have guessed, just because interest rates getting better is usually good for the stock market and they usually like it. But he's saying that this time it may actually be enough to make the stocks go like, oh, the recession is coming. That's bad. But at the same time, if it's too good, you could see stocks fall on interest rates rising. So I think he's kind of saying that the both the probability and the risk reward in equities is that you sell this. But maybe it just comes in line with expectations, and then there's nothing so scary, and treasuries actually, or sorry, S&P 500 actually rallies, maybe? Volatility is good for eating sunflower seeds? Oh, those words aren't in the spirit of the English language. English words are positive, uplifting, calling for action, active, go-getting. So a rate decrease is kind of the opposite of the kinds of words that we like to use. I get you. It's cheaper to, well, it is, but it's more risk. I don't know. Like, it depends on what you're doing, okay? If you're taking like hundreds of trades a day, then that extra commission is a significant sum of money for sure. But that's not most retail traders, right? Most retail traders are not profitable. They're still struggling. Okay. The commission is not the thing that's killing you. The thing that's killing you is that you don't have an edge. And the longer you can survive, the more time you have to find an edge. And so it's better to reduce your risk. And yes, trade micros. It's kind of a funny thing because I always will see these people get, especially on Reddit, and they're like, well, the reason why most traders fail is because most people give up really quickly. But if you stick with it and you actually get good, then you increase your probability of success. Well, yes, but like the probability of success is maybe more like 60% instead of 90% failure, 60% failure rate. Most people still fail. Because the reality is the way that the market is set up, they're always looking for edge in the wrong places, right? I think that if you take, so my theory would be, if you take all of the information that we have about markets, about the stylized behavior of order flow, and you combine that with understanding the market and really studying, I think that you can get your probability of success to more in the 40 to 50% range. Is what I think. It's still going to be super hard because the robots are really hard to compete against, right? But once you realize all of those things, it's obviously, the first thing is you do have to last a while. That doesn't guarantee you success, but you do have to last a while. And reducing your risk in trading a small instrument is going to do that. Coming in for a beginner and focusing on the commissions is not going to help you. Yeah, okay, cool. You make more per tick. Your tick commission ratio is less. You're trading full ZN contracts. Yeah, but you're losing 10 times more when you lose. So doesn't matter what that commission is when you're losing overall. Seth, should probably be trading full ZN contracts, but kind of makes me nervous. So I think I will stick to micros for now. Because I'm to the point where, I've had some pretty good periods of success, and if I was trading multiple contracts over here on ZN, I would be pretty proud of what I've done. Because if you go and you look at my results from these trades that I take in ZN on Sim, they're amazing. With what I'm doing right now, my trading basically covers the costs. Whereas if I was doing it over there, larger count, it would actually be profits. And I'd be building up and I'd be sizing up and things like that. So probably I should be, but it scares me. Someday. I don't think that I'm quite ready yet. I'm still really curious about that huge spike up we had that faded so quickly. When it did that, I was seeing stuff in the Japanese yen, but pretty much just looks like noise now in the Japanese yen. So I'm not quite sure what the driver was there. Overall, the treasuries have been selling, and I think that I would be leaning towards the sell today. I think that the narrative switched really hard yesterday, and I think that I'm scared that ISM will be better than expected. But if I'm wrong and the ISM is worse than expected, then I buy this. I turn around and I buy this hard, right? So I think I got a pretty solid plan for how to trade this today. So if the liquidity in the micro cooperates, I might be able to take a quick trade after that. Okay, so I'll read this story later. It's a premium story on Zero Hedge, but they're basically saying that the swings in oil are happening because the CTAs in oil have just become absolutely massive. Oh, right. Okay, so this other story I'm reading, their IETF is proposing changes to gun rules that basically says private individuals who sell a gun to a friend, neighbor, or family member would have to have a federal firearms license and run a background check on the prospective buyer. I don't think that that's a good rule change, but it sounds like it's going to happen. That would kill the secondary market for guns for sure. Well, they're starting to get into some of these levels that would be like a break. They don't seem to be slowing down either, so maybe we are going to go for some new lows here. Let's see here. If I look at the volume profile, that is for the overnight, but there was some periods yesterday where we were down as low as 22. So we're at the point where you just make your own guns. Well, but they're talking about like the 3D printed ones, because they're really, really concerned about that as well. If you watch it though, because you would think, okay, like look, Americans overwhelmingly support the Second Amendment. Okay, they might think that there should be restrictions on who can have them and how difficult it is to get firearms, but Americans do not agree with like just an outright ban or some buyback scheme like what they had in Australia, for instance. And so you would think that all of the left's efforts to try and restrict firearms would be kind of pointless. Well, it should be, right? But they think long term, right? You just chip away at it a little bit by a little bit. Make it harder to get them so that you can't buy them secondhand. Make them more expensive. Less people are able to afford them. That means that you have less people that support it. And you just whittle it away over time, and maybe 100 years from now, they'll get what they want. That's how it works. Which, you know, and the thing that I think is weird about it is that, like, if you're trying to create friction so that normal people are less likely to buy a firearm, I think you're already to that point, you know, like, and you don't have to do anything. Just like the risks of, yeah, a firearm kid could get into it. You need to have a safe to lock it up in. Are you actually going to go out and shoot with it regularly? That sort, you know, there's a large portion of people that aren't going to do that. You know, like Brad says, everyone should be packing. Like, concealed carry is not. I think that some people think that it's just like, yeah, you just buy the gun and then you just carry it around with you all the time. But it's like a huge burden, actually. I don't think I would do it. Like, I think I give the concealed carry to my wife because she can carry it in her purse. But the whole idea of like having a gun on underneath of my shirt, and I need to have shirts that accommodate for that and all of these other things, I just can't see myself doing it. If I wanted to take an autism, no, I've never heard of such a thing, but I'm sure that they're out there. They're definitely out there for ADHD, right? I could open carry, sure, but you're talking to a guy that, you know, wearing a watch is a huge struggle, right? I really liked the watch. I really like the watch. I don't have it on me right now. It's over there. Forgot to put it on this morning. It's a struggle to remember to put it on and to put it in the right spot so that it's there for me. But then it also, you know, it's a metal bracelet. So like if I'm just walking, the bracelet pushes up against my hand, you know, which is, it's not here, it's here. That's really annoying to me. It's super annoying to me. I can't stand it. I don't think you want the heat from opening. In Utah, I don't think there would be a huge deal, but I don't think I've ever seen anybody here in Utah open carrying outside of like, you know, a show that's kind of hyper conservative sort of sport anyways. Can't stand it having any jewelry. It's really with all of the difficulties and so forth that are involved in having a gun. It's amazing to me the amount of Americans that have them. I mean, because it is most Americans. So. But this ATF rule is going to be a big deal. There's going to be a firestorm when they push that. This is one of those things, again, I think it's a lot. So I'm old enough to remember the assault weapon ban, right? Because it was one of those things that, like, it happened and nobody was paying attention. And then after it happened, we were like, oh, this is such a stupid idea. And then, you know, eventually it got to the point where it expired or something like that and everybody forgot about it. But I remember it being a big issue when I was a kid. Micro compacts are easy to carry. When I was 16, I used to think that every US born child was given a 22 by the government and every Norwegian was given shares in Norge's pension fund. Both turned out to be false and shattered my world. I don't know. I let my parents deal with that stuff. Like we have weapons, but they're in my parents' house. Because the thing is I don't have the time to go out to the range every week. Maybe when my kids are like 5. Maybe in 5 years. Then I would spend a ton of money on a weapon. How do you get time to trade and work full time with 2 kids? That's a good question. The answer is that they don't wake up until like 8 o'clock. And I have a wife, right? So she deals with getting the kids ready and getting them up so that I can trade. Because you notice, like, making more videos. I might make a video this month. I have a thing all set up and everything, but I'm not going to be recording one this weekend because she works on the weekend. So I watch the kids on the weekend, basically. How are millions not up in arms about the new? Okay, so what are the specifics of the new company reporting requirements that are now required? Do you have a daily target or just how to close your trades? So I would recommend against having a daily target. So the way that this works, I don't have the pen open. Need to make sure that that's pinned to the start menu. I think maybe someday I want to get a whole armory, but like right now I'm kind of like, I'll look at what like the ones that I think, you know, that I would really like to get. And I'm like, I don't think I want to spend $1,500 on that right now. You know? I did click on it, right? Oh, it's over here. Okay. So if you look at your daily profits as a distribution, right? We were talking about this, what, yesterday? Okay. There are these events that are like way out here that you'll make or lose more in a day than everything else that you made all of the other days. And that will blow your account. So it makes sense to set a daily loss limit to limit that tail. That doesn't completely protect you from it because you could be in a period where you hit that several days in a row and then that ruins you. And that's what often happens to traders. But you want to limit your far left tail and you want to maximize your right tail. So if you do this, right? If you do this, then the only way that you're making money is if you have something like this, right? How do you do that? Basically, you have to have a strategy that where you win most of the time, even though you have an equal risk reward. So that's really, really hard. To do a strategy like that, that would basically be like scalping. Not much edge in that anymore because the robots took all that edge out, right? So instead, you want to maximize those far right tails. So I say, if you're having a good day, keep trading it so that you can eventually someday within that 2-year period, you're going to have that one day that makes it all worth it. So I wouldn't put a limit, but I do have things that tell me to get out of trades. Okay, so the way that this works is I'm trying to predict future orders. So I will have things that tell me what the future orders are going to be. We already kind of talked about what those things are today. So if we have a weak report the plan is the S&P 500 will sell and the treasuries will buy. Okay. I'm less certain about that ES trade. Maybe I'm wrong about that, but pretty confident that the treasuries will buy if the ISM PMI is weak. Okay. But how much will buy? Well, like an average size move would be about 10,000 contracts. I think this is probably more than an average size move. So I think I want to see cumulative delta move like 20 to 30,000 contracts, right? So I'm looking over at my cumulative delta. I'm in the trade. I'm up. I'm winning. I see cumulative delta. It's like 20 to 30,000 change now. And I'm seeing the liquidity hole form, which is where the market makers don't want to put the liquidity up, and it just starts to range back and forth across like a 2-tick range in the 10-year treasury, right? That's a liquidity hole. That liquidity hole tells you probably not going to move for 45 minutes. And if I've already seen like the amount of change in cumulative delta that I think I'm going to see, then that's usually when I get out. And sometimes I miss a third leg, but it's okay. You need to make a delta for swings? I guess I could. So that price action swing indicators, there's a lot of problems with them. I think that there is one out there that gives you change in cumulative delta. I know that the one that Jigsaw has does that. So you could use the Jigsaw one. But I think you're using NinjaTrader, so you probably can't use that, huh? Merritt Black, never heard of him, says he doesn't need the DOM. He can read the delta instead of reading so many numbers. Well, I think that you could probably trade pretty okay just looking at the delta. But I think that there's a lot of information that you get when you're watching the DOM. Because the thing that the DOM does that you can't get anywhere else is seeing how much it's taking to move it, essentially. Like I can come in here and I can see 1653 traded there to lift the offer at 26.5, right? Okay, now they're trading 1,000 at 27.2. That's pre-standard. Like I would say that 1,500 to 2,000 is about standard, at least in current conditions, for how much it will take to move the treasury, right? So if I see the market move 2 ticks on less than 500 contracts each tick, that's like a big signal to me, right? Why didn't the market makers want to take that? Was the correlation moving? Was there news? Why did the market makers pull away from that? Or vice versa, if I see us move up 2 ticks all of a sudden, and they traded more than 2,000 contracts at each of those prices. Okay, so there was icebergs, and the market orders still pushed through. I would probably be very, very likely, at least in the current market situation, where we are, I would be very, very likely to try and jump on board that one. Because that is a really strong impulse that implies that there's going to be more orders behind it, right? And you just can't see those things on a chart. There's a lot of information that you're missing. So, but I guess one of the big things that you got to keep in mind is with anything that you're seeing out there in trading is that the majority of retail traders are trying to trade technical analysis. They think that they can make money by just watching what everybody else is doing rather than from understanding the market. And the big thing that I'm saying is that while there are some stylized behaviors in the technical behavior of markets, it's pretty difficult, if not impossible, for a retail trader to make consistent profits from those behaviors alone. You need to understand what's going on. It'll be much, much easier for you to trade if you understand what's going on and you have a bias and you know that today the market is much more likely to go up than to go down and things like that. If you can identify what the trend for the day is going to be before it happens, that's like 70% of the battle. And the rest is just finding a good spot. Thoughts on a footprint chart? So there's nothing wrong with footprint charts. Again, it doesn't show you some of that really granular information that the DOM does, okay? But the advantage of a footprint chart is you can look back at the past and you can kind of see a little bit more detail about what happened. I don't usually find the footprint chart very useful because I'm watching the DOM and I remember what happened really well. So having the footprint up doesn't really remind me too much. I used to put one up. I used to have one up in the upper left corner here, but I don't really mess with it anymore. You can have DOM infos on a footprint chart, sure, but so there's kind of, so let me kind of try and segue this into something I wanted to talk about today. I think that having like trading mentors and somebody that you look up to in trading is really important. Because humans are social learners, right? So what they want to do is they want to see who's doing this thing successful, watch them, and then copy what they're doing. And we always talk about how that doesn't work in financial markets because if you do the same strategy that I am, you're canceling each other out because it's competitive, right? But I would still say that having people to look up to is important. What you want to do is you want to emulate, let's not say like emulate perfectly, but you want to learn from them as a person, not necessarily trying to copy their strategy. Do you get what I'm saying? So remember, your brain is this organic thing that grows and makes connections and all of that sort of stuff, right? That is the same case for your strategy. Your strategy will become an organic thing that kind of grows and makes connections as you experience different kinds of markets and things like that. And the thing that I want you to learn from me is, how did I develop that? How did I come to that point? What is it that I'm doing? And my approach to the world and the markets and so on and so forth that allowed me to build the model that I have in my head that allows me to, I'm not going to say that I'm perfect, but I think that I've been doing a pretty good job of, explaining what the flows are going to be and what is likely to happen for that day. That's why you guys keep coming back, right? That's the sort of thing that you want to emulate, right? So when it comes to something like footprint charts, I'm not saying you can't use footprint charts, right? But what I'm saying is, okay, what is the way that Seth went about this in developing it, right? Well, I wanted to see the most granular information possible and watch it live as it's happening, and then minimize the other distractions. So there's all sorts of, I could have the stacking and pulling columns. I could have the buy sell profile columns. Could make all of these numbers smaller so it could fit more instruments on here. I could add a ton more indicators over to my chart. I don't do that. I only focus on the things that I know explicitly give me an edge. So that is the DOM, spreads, cumulative delta, and then maybe a couple of other things that I think are specific to that instrument, right? And knowing what all of the instruments are doing. And that's what I'm trying to absorb, right? So you can totally make footprint charts work. I personally don't think that they really actually add too much to you. And I'd go further to say that, what made footprint charts popular was that there was a number of specific setups that were taught when these guys, I think that it was Market Delta, were the ones that first made these popular, right? And they had a couple of trades that they taught people and stuff like that. But from what I've seen, they aren't effective strategies. So that's the other thing is I kind of try and point people away from the footprint charts simply because I know that they're going to go and watch YouTube videos that are going to tell them this is what an unfinished auction looks like, and you should trade on the theory that it's going to go back up to that unfinished auction, and it's nonsense. And I don't want you to fall into those traps. That's all. That's all it is. Do you think it is a good idea to have a strategy for each type of day? For example, a specific strategy for when the market is bracketed and another for trend day? Yes. Well, this is what we were talking about yesterday, right? Yeah, absolutely. You're the way that you're going to trade on a trend day has to be different from a mean reversion day. Now, there are some things that are going to be similar, like kind of what will get me into a trade and what makes me want to take a trade in a certain spot on those 2 days are similar. And I guess the big thing that changes is how quickly I go to take the profits, right? If it's a range bound day, then I'm looking at where the range is and I'm taking it off before it gets even close to that range. Because I don't want to see it fizzle out and then see everybody cover and swing it back the other way, and you lose everything that you just made, right? Whereas if it's a trend day, I want to try and let it run as long as I can. If I can just take one trade at the very beginning and then hold it all session, that's the ideal scenario. When it comes to grinding and building small amounts of capital, you probably need the less amount of trading tools possible. In my opinion, first grind and build capital, and you get to the right to F around. Yeah. Well, I kind of think one of the things is understanding the markets at the level that we do is really, really valuable for whatever it is that you do in the market. And I would think that the majority of you that do have like eventual real success in the market, that, you're going to trade, you're going to scalp and day trade, and you might have some success. Maybe you really do crazy, but usually the people that like they make crazy amounts of money from doing this is because they're doing something kind of degenerate, right? I think that what usually happens is you kind of graduate to higher time frames, right? You do okay. You say, okay, I got an okay thing going on here from day trading. It's not super great though. And then you switch over to swing trading, and there's a lot more money involved in it at that point. You have to have more risk, but hopefully at that point you're older, you can take that risk and you take swing trades, right? And then you move from that to being a position trader and, and managing a stock portfolio, and you can make, it's a little bit more likely for you to make big amounts of money when you get to those points, right? Stocks tend to move up. It's interesting that the NoBS guy said that people probably shouldn't be trading HFT. Yeah, that's probably true. I'm not going to try and stop anybody from doing it, but I don't do that, right? Oh, that they probably shouldn't be trading higher time frames? Sorry, I misunderstood. I thought you meant high frequency. I guess that would be HFT, not HTF. So most people probably shouldn't be trading high time frame because they don't have the capital for it. But if you have the capital for it, it's a better game. It's straight up, it is. Most retail day traders will just lose everything that they put into it. Once you start swing trading, you're much more likely to make money. I mean, if it's a bear market, you get slaughtered like everybody else. But most of the time we're in a bull market, you're going to be buying things, you're going to make money. You might be underperforming the market, but you're probably making money. I think that when you're to the swing trading level, to consider yourself profitable, you have to be profitable on a risk-adjusted measure, which means that either the Sharpe ratio or the absolute amount that you're making is better than what it would be if you just bought and hold the S&P 500 to judge your success for swing trading, okay? But making money is making money. you're likely to make money when you're swing trading, even though you're probably underperforming the market. Right. Can you see the screen that I posted on Discord? Oh, you sent me a message. I see it. Yeah. Yeah, you can totally see iceberg on a footprint. Sure. You can actually see there's probably I don't know how to read this one. It looks like that you're saying that the cumulative delta is selling 732 there, so they're selling and selling and selling and they're not able to get through, and then eventually the guy is done and these guys puke and it pushes it higher. But you'll see that on the DOM too, right? You'll see that in cumulative delta too. And that's the thing, is like, does what it gives you justify adding that much to your screen? And can your brain actually make sense of that and incorporate it into its model is the real question. I say that just watching the DOM here will occupy you. You know? Kevin's a little different. Kevin's been at this for a long time, right? But definitely if you're a beginner, I think I would only start adding things if you have a hard time. Like if you've had a situation where several times there was absorption at a spot and you saw it, but you didn't realize that it was absorption at that same spot every time, and you try selling into it or something like that, right? Once you've identified a problem, then it makes sense to like put something on a chart to help you see that more easily. I think it could be argued from a risk standpoint, trading longer time frames means increasing variables at which you're exposed to, making outcomes less reliable. So yes and no, I think. So if I'm swing trading and I'm holding swings for a few days to a few weeks, those like variables that you're talking about that are a huge deal to us as a retail day trader are not as big of a deal to you as a swing trader. They're just kind of blips and bumps along the road. The thing that is in your favor with swing trading is that assets and stocks in particular tend to move up. So you're a lot more, you will go and find, if you just go and you survey people and you say, okay, you're a retail day trader, and you were really able to verify what they had made, right? And then you looked at all of the swing traders, I bet you that what you would find is most of the day traders lose money and lose everything that they put into it. The swing traders, and I'm probably going to say like 60% of them, are actually making money, but not enough money compared to what they would be getting from the S&P 500 to justify the activity that they're putting in. Right. But it's that tendency for things to buy that once you get out to a higher time frame that's several days, like really, really works in your favor, right? Well, I'd be really careful about drawing too big of a conclusion from one individual data point or one trade that turned out, right? Like one of the big issues, iceberg is a perfect example, guys. It's a perfect example. An iceberg, the existence of an iceberg in a certain area alone is not a very good indication of what's going to happen. I can think of plenty of situations where, okay, yeah, there was somebody buying there and it was creating support, but then once that guy is bought through and they get below them, it just absolutely pukes, right? The only way that you can know that is if you have something that's going to predict the future orders and tells you there's a lot of market sells still out there to come through. Now, when you have those things, like, you know what the flows are supposed to be, and you know what's going on in the market, and you have some ideas about why that iceberg might actually be there, now the existence of that iceberg can actually be a really useful piece of information, right? But the larger point was, hey, how do we build this neural network in the front of our heads the most effectively, right? And the big thing that I'm trying to tell you is have a model of what the future orders are going to be, and then watch the action on the DOM with that in mind. And that will help you, because what you're doing is, if you're trying to build a network, and most of the information that you're getting, that you're putting into that network, is random, then the chances are that the resulting network that you make will also be random, right? So how do you avoid doing that? So some people, they just sit there and for a really long time, and eventually they figure it out. And I would consider those people lucky. I've never been the lucky one. Okay. So what do you have to do? You have to be able to filter that data down and to know kind of some things to help you interpret that data correctly, so that the stuff that you're putting into your model and are actually incorporating in, like, burning into your brain, is actually real stuff, right? Because what will happen is you'll see an iceberg and you'll trade off of it. And then your brain says, oh, that worked. You get the dopamine. It reinforces that brain pathway. Now you're always spending a lot of time thinking about icebergs when you see them. When the reality is, especially here in the treasuries, a lot of the time icebergs don't mean anything. In fact, if anything, when I start to see a lot of icebergs, that kind of makes me want to not be involved in the market, because you get iceberg city and it's just like a shit show. But I digress. Right. You want to be able to filter the information that you're getting. The more you can filter it before you start putting it into your brain, the better. And so at any point when you're thinking about adding something else to your screen, you've got to ask yourself, why am I adding this? Do I have what is the reason that I have to believe that what I'm adding will actually help me? Because I think what a lot of us do is we go out and we just download every indicator that we have and we put them all on the chart, and then we say, okay, I will watch this and that will help me determine which things matter and which things don't. And then over time, you kind of like, you prune them and stuff like that. I'm kind of saying you should take the opposite approach. Start with only the things that you know help you. And then maybe you'll add something that you can kind of look at and play with, or you'll add something as you come across information that suggests that that thing will be useful to you, right? And presumably for something that will give you, you know, what would be a reason that you think it will help you? Well, because there's like empirical evidence to back that up, right? Because the reality is that there's just too many indicators and things and people saying stuff out there for you to ever sort through that. And building that neural network takes time, takes years. So you're dinking around with some indicator that doesn't mean anything, or some theory that is really mostly just random. You just lost years of that time to develop that network, and you're running out of time, right? You need to get that stuff in there before you get into your 40s and 50s and your intelligence starts to crystallize. I like to get it out of a trade if I see an iceberg. Well, the way that I use icebergs is I have my bias, so I'm looking for a trade anyways, right? I'll be saying I want to buy or I want to sell. If I see an iceberg, depending on which direction it is, that can be a good place for me to get in, right? Because if there was an iceberg at 26.5, for instance, I know that I can probably get at the front of the line there and get an easy fill. So it's an easier way for me to get in on the limit, right? But I'm only going to do that if I would be getting in there without the iceberg, right? It's just that maybe without the iceberg, I would be hitting into it with a market order instead. I just let them do their business, Ian. How do you read and process the DOM on ES? It has become so thin, it moves so quickly. You know what? I don't know if I have a good answer for that one, to be honest with you. I find the S&P 500 extremely difficult to trade. I do. It's extremely difficult to trade. I think that the way that you have to watch the DOM in ES is very different from how you watch the DOM in the Treasury. In the Treasury, you can see the stylized behaviors very, very easily. In ES, it's a little bit more difficult. There's a lot of noise. You have to pay much more attention to price moving up and down. I'm not a huge fan of it. But, you know, that kind of also brings me back to, I also feel that the informational edge that you can develop from indexes is a little bit more difficult to build as well. Yeah, sometimes the S&P 500 will move on macroeconomic news and then you can make a trade and you can make a ton, but most of the time it's just noise over here. Whereas in the Treasury, Treasuries usually don't move very far unless there's a good reason for it. How do you use the tool spread? So there is an indicator in, I think he's talking about the indicator in my indicator package. Actually, you know what? Let me get into that after this because we're about to get the news, right? We are about to get the news. So in about a minute. But basically, I put it on my Treasury things to monitor the yield curve is basically what I do. And then based on which way the yield curve is going, that kind of helps me determine which kind of trades I might want to take. Because you want the spread to be favorable, essentially. Well, let's do a gamble here with our sim account. Seth is a master of segues. I don't know if being a master of segues is a good thing. All right, here we go. Okay, well, the spread does not, I'm not liking. This is a little intense. It was weaker than anticipated. It was 46.7 versus 47.8. Prices paid higher than anticipated. Well, Spread is still wide here. Okay. So, they might go through there. I was a little bit concerned about it coming back, and I just really didn't like the spread. Oh man, look at that. Okay, so there's another 5. But one of the things that bothers me about this is that, like, prices paid was high. Employment index was low. And where did I get out at 305? But like, I really paid up to get into that, right? So I was really concerned about it sliding back. This is actually a really crazy wild one. So I tell you what, look at this trade here in ZN. So I'm gonna take it off right here. Okay. Oh yeah, I had 2 contracts. Okay. Do you believe me now? I know I always say, like, don't try and extrapolate too much from one data point, but I hope if you're new and you're watching that maybe gives you a little bit of pause. That's like, maybe there actually is information out there that can help you predict what's going to happen before it happens, right? Because the research and stuff that we did at the beginning of the stream was spot on. It was a little bit weaker than expected, and the treasuries bought off of it. Now, I said I'm not so sure that the S&P 500 will actually sell, because the guy that was doing that analysis, he thought that it would be bad for stocks, but the stocks are buying right now, aren't they? But in that situation, I didn't have to worry about that because I was trading the treasuries, right? Okay, so it does look like I could have gotten the 20. I was kind of thinking, I should try and go for 20. But that was a 20,000 change, right? So this is the other thing, is like, I should be looking for the reason I got out in that situation was because the spread. Because I was worried if it came back, I'd be under $10 really easily, right? So I think, and it was really nerve-wracking too. You notice how quiet I was, but I'm seeing the liquidity hole kind of behavior. I would definitely be getting out 429 here. That doesn't mean that I would take a reversal here, but if I had gotten the $20, I'd definitely be taking it and running. Okay, Feds Goolsby is speaking as well. He could come in and say hawkish things, so that's a risk as well. And this gets interesting. I think that, so sometimes I get a piece of news like that, and I'll be like, oh man, they could just trade this all day, right? Not in this situation. In this situation, I want to get my money and get out. Why? Because Jerome Powell will be speaking in 1 hour. Again, that's information that is not from like what other people are doing, right? That can tell you a little bit about how people might execute and how the market may behave. Should I call the hero trade? I don't think I would want to. Well, so when I see a spike like that, I'm usually the last person to try and fade that, right? But I think I could maybe talk myself into it. If we've got a Fed speaker and we got Jerome Powell, and Jerome Powell is going to come in here and be hawkish, right? Then yeah, that's absolutely going to shove the treasuries the other way. I don't think that now would necessarily be the optimal time to try and take that trade, but it might be there. It might be, a good idea to take the trade, go short the treasuries, on the theory that Jerome Powell is going to be hawkish and jawbone the treasuries back lower. And if that's what happens, the market makers and the liquidity and everything is going to be so You know, I think the liquidity will be fairly recovered by the time that he speaks, but you know, that kind of a head fake sort of a move will make that second trade short probably very lucrative. But that's even more speculative than the trade that I took and caught a winner on today. So, and I should point out, by the way, as well, they are already pulled back to basically where I got out. So one of the things that I've noticed is that, like, by the time I can get in after this move, it's usually like that's exactly the spot that they start playing around. So yeah, the comments that I'm hearing from Goolsby sound hawkish. There's no evidence that we've successfully stalled inflation. So what I just heard there. Basically, it sounds like he's saying, yeah, inflation has come down. I would expect inflation to come down because the things that were driving it were taken off. But that doesn't mean that we're going to come back to 2%. And there's still a concern that inflation will get stuck at 3%. And it's way too early to say that we've succeeded on that one. So the Federal Reserve needs to remain vigilant. He's absolutely right. There's no evidence. Oh, so he said there's no evidence we've stalled at 3% inflation. Okay, well, but there's no evidence that we haven't. I think it's a risk that we just have to watch, right? So this is a pretty good pullback. It looks like it's going to come and it's going to try and make another move here. I don't know, that trade that I took. Well, this one here in the treasury, that was effing amazing. Where did I get out? 07.5? It could have been a little bit better, but that was a freaking... Dude, I feel like a rock star today. Because not only did I take the ballsy, I think I know what's going to happen on Sim and made money with it, but then I also did the ballsy, okay, I'm going to trade in low liquidity and hit into them with a market order. I guess I only took $10, but still, I think I give myself a pat on the back because I think that that's about the best that I could have done in that situation. I think that I traded that after the news hit about as well as I possibly could have, and I'm really, really happy about it. This got me going. My wife, she's going to be working this weekend, so I'm going to have the kids both days. And that can be a real drain. But that trade makes me feel like vigor. You know what I mean? Gets the testosterone going. It's like, you kids, you're going to have the best effing weekend ever. It's going to be great stuff. We're going to go get it. We'll get it. Now, that said, the market is not done yet, right? So what is it going to be? Just keep an eye on. So I don't think I'm going to take another trade, but I still need to pay attention to how this plays out, both so that I can understand in the future, you know, situation where I might want to take a trade after this, or, you know, just kind of have the context for when Powell speaks and stuff like that. Unfortunately, I won't be here when Powell. I'll end before Powell speaks, so you guys will have to go and find that and watch that on your own. So let's put rates drop after week manufacturing PMI. I want to say something about how I got a quick win, but I guess it doesn't really matter. Oh, so I didn't see this, and I don't know why Dennis was messaging it to me, but I think it's a good question. So I'll just talk about it. Like, out of curiosity, what scares you about sizing up? So I know that if I have a bad day, that I can lose like $50, right? That if I have a bad week, I can lose $50 3 times in a week. That's like $150, $200 drawdown, and that can be like equal to like all of the profits that I've made for a week or two, right? So I think that there's still a bit of a far left tail in the way that I trade that I'm still kind of struggling to filter out. I don't get the super far tail event, but there's drawdowns in my performance that I really, really hate. And if I sized up with the size of an account that I would be comfortable funding right now, at the very least, that kind of a drawdown would be too much. So that's kind of why it's like, I would rather trade the size relative to the account size that I'm comfortable with. I don't really feel like that I have a strong need at the current time to really be doing risky things, right? And honestly, I do think I am starting to save a lot. I'm almost done with the saving that I wanted to do. Not to start a hedge fund, but just like the most basic stuff, like funding the IRA and all that sort of stuff, right? So I will have some more money to start putting into markets, but I think at the beginning I will be leaning more towards putting it into stocks. So I think it will be, I want to do something where we put 500 to 1,000 into a different play every month. And these would be like more long, buy and hold kinds of things, buying stocks. Use anything like TraderView to help you filter out bad trades? Yeah, Octavia says it's a bad time of year as well. That's true. If I'm going to size up, it's going to be January, right? So there's a good chance that come January, February, that I might trade double contracts, for instance. Again, just like I traded double contracts in September, August, even though it didn't work out very well for me. But in terms of like, how do you filter out the bad trades? So the issue with my strategy and the reason why these drawdowns happen is because you will come into a market that you don't understand, right? Basically, if you become disjointed from, so today we were really in line. We were able to predict what the PMI was going to be. We understood it, and we understood at least how our market, the treasury market, would react to it really well, right? But when you get that wrong, that's kind of like, okay, so what was it that I didn't know that would have helped me get that one? Well, I don't know. And if I'm not able to find that, now I'm behind, right? And you'll just kind of get further and further behind. And I, on top of that, when you lose, it kind of affects your brain and your mentality. It makes it harder to win. It makes it harder for you to think clearly. It's and so that's where you get those drawdowns with the way that we trade. So the thing that you've got to resolve is you've got to know enough about the market, and you need to be up enough on the current happenings that you don't get that far off kilter with it. And I still did that twice this year. And we still got to work that out. That means that I need more time, right? Yeah, when I first started the channel, I was doing prop firms like everybody else. We didn't have micro contracts back then. So prop trading was basically the only way that I was ever going to trade. That I was ever going to have the ability to fund an account, right? What happened was I kind of realized that the rules were kind of stupid. That the rules were working against me, and that I were really forcing me to trade more aggressively than I should be. So I decided to just fund an account and just trade a sim. That's what I did for a long time. And then the micros came along, and that allowed me to get back in and start trading live again. So, but after that, then there was this whole thing with Earn to Trade, because they were the ones that wanted me. They were the first ones that reached out to me to be like, "Oh, let's have an affiliate link for this." And I'm like, "Okay, I don't really care, but I guess since you guys reached out, I'll put your affiliate link on." And then there was this whole thing about their founder. It was basically outright fraud, and by that point, I had really turned negative against the things, and so I made the decision to not have affiliate links for funded trader programs. After I did that, funded trader programs became a lot more popular, right? That was after that point, like 5 of them popped up. Like, here's the thing. If I had leaned into the prop firm thing, if I had said, I'll continue to review the different ones and try to pass the combines and think, I'm sure that I would have been funded at least once or twice now by this point, and the channel would probably be super popular for that thing. But the reality is I just don't like it. I don't like the prop firm thing, and I don't want to be involved. Which broker do you have? I tried interactive brokers, but man, I hate their data feed. Yeah, for futures trading, I would really recommend that you get a futures specific broker. So I am using EdgeClear. Then the thing that I like about EdgeClear, they know what they're doing and what they're talking about. So you get somebody that when you need support actually understands what's going on. And they have higher risk requirements and things like that, which I like. So they're not trying to push people into just trade as much as possible. And they're independent. So there's a bunch of different platforms that I got. They have their own platform that they offer, but I can also use Jigsaw as opposed to like Sierra Charts, even though there are introducing brokers for Sierra Charts. Basically, you have to use their software, their feed, etc., etc., etc. Ninja Trader, it's turning into you have to use their software, their feed, their FCM. With EdgeClear, I have the freedom, right? But the reason I bring that up is that maybe for you, that freedom is not a big deal. If you like Sierra Charts, their data feed is great. You can just go and do with them and get everything from them, and you'll probably be happy. There are some big advantages to having a unified platform like that, right? It's just that for me, I like to tinker and have all of my fancy software and stuff, right? So that's why I do EdgeClear. Basically, my point is I really like EdgeClear. I would totally encourage you to go and use them, but you should consider that your needs are probably going to be different from mine. That's why there's so many brokers, right? It's a competitive space, and in a space that's as competitive as futures brokers are, they have to specialize in order to set themselves apart. So there's something, and there's an ideal trader for every broker out there. Does EdgeClear? Well, I mean, pretty much all of the futures platforms have a time and sells, right? I'm not sure, that question doesn't seem to make sense. Yes, I use Rhythmic with EdgeClear. They have Rhythmic, CQG, all of the. Well, I think I should probably come back through here and try and take a little bit of a survey of the markets here. The biggest winner on the session is copper. Copper didn't really move off of that news. They had already kind of jumped up. Next biggest winner is oil, which is kind of funny because they had such a huge decline yesterday. So it's just kind of a little teeny tiny little recovery from yesterday, but whatever. And then we get into 6J and the bonds. So the treasuries really jumped up. So I think that even though I was kind of like, I think that the ES will sell, but I'm not so sure about that one. I'm much more certain about the treasuries. But the treasuries moved more on a percentage basis than the S&P 500 did anyways, so it's not like we were missing out on anything. And the S&P 500 did jump, but they've retraced most of that. So they may actually, as of yet, turn negative, as was, we predicted that the flows would be negative. Maybe the S&P 500 is kind of changing its mind here and deciding that actually that weak PMI is a bad thing for stocks and earnings. TradeObait's level 2 data doesn't have time. Really? Well, time in cells is a weird thing, though. I mean, if you are getting depth of market, you are definitely getting time in cells information. Like, you have to be getting the fills to be able to see, what the volume is going off there and at what prices and stuff like that, right? But you might not have a reconstructed tape. That's the interesting one, because what happens is they tell you, okay, if I were to come in and buy all 2,000 contracts at 09.5, what your data feed sends is not there was a market order that was 2,000 contracts. Actually, what it says is there was this limit order was filled, this limit order was filled, and so you'll actually see it come through as a bunch of ones and fives and smaller lots, essentially, right? So they show the who got filled side of it rather than who was the aggressor side of it. So if you want to know what the market order was doing, which is what we're most interested in, you have to reconstruct it. And that's what Jigsaw's reconstructed trades tape does, is it's able to say all of these orders came in at the exact same time in between when there was level 2 changes, which means that it was all caused by the same market order. So maybe it's just that TradeObait doesn't have a reconstructed tape, but I'm pretty sure you can use Jigsaw with TradeObait, and then you would be able to use Jigsaw's tape on that, right? Okay, where are we at? Oh, we're back down. So it jumps between that 4.3 and that 2.9 really easily. It's kind of interesting. Must be because of the 30-year, huh? Oh yeah, the spread. The spread steepened considerably. Like the 30-year really jumped there. So I'm watching that because I'm still kind of like, could I have gotten a little bit more? It looks like I could have. But I do think that in those circumstances that it was not a bad idea to have just taken it off, because it was a little risky. Okay. I went on EdgeClear and I observed the futures commission merchants. If you have time to talk about that, what do you know about it? Okay, so the way that it works is your broker is really like sales and support. Okay, so their whole job is to get people to sign up for accounts, and they make money off of the commissions and stuff. And, if something goes wrong, they're the one that you talk to. So the service that they're providing is sales and support. The ones that actually have the relationship with the exchange and are like executing your orders and all of that sort of stuff is the FCM. So, for instance, you start an account. How do you get the money over to the account? Can I just use an HCM and just link my bank account and send the money over there directly? Do I need to send them a money order, or what do we call them? A financial transaction, whatever. Do I have to write them a check and mail them? When I did it with AMP Futures, I was always sending them a check. That is all up to the FCM. What kind of report do you get every day? Like, the little, they're supposed to send you information about your account every day. That's the FCM. Okay. Now, many of these brokers have deals with multiple FCMs. And when that is the case, usually it's that one FCM is good for US customers and one is good for foreign customers, is usually what that's about. So I forget what the name of the FCM that we're using is. I think it's Phillips, but I could look that up. Yeah, it is Phillips Capital. Yep. I am studying ICT concepts, so I have a video that posted a few weeks back. It's the most recent video on my channel where I talk about ICT and specifically the silver bullet. So I would encourage you to go watch that video, but the basic gist of it is that it doesn't work. It's just a risk-taking strategy, and there's not actually an edge to it. So I would encourage you to watch the DOM, because the DOM is the only way to really understand what's going on, right? Without the DOM, you don't understand, is it market orders coming in and being really aggressive? Is it offers pulling out of the way? Like, how is it exactly trading? There's the only way that you can really know everything about what the orders are doing is watching the DOM. And that's why it's such an important skill and such an important thing to watch. But the ICT stuff is useless to you. So go watch my order flow video series. Start learning about the market. Go read Zero Hedge a lot. Read economic reports. Like, we had a PMI today. A good thing to do if you have the time afterwards is to go and read the actual report, right? And do that. And that's where I think you're most likely to be successful in trading. Well, my understanding is that there was some pretty wild back and forth harassment between ICT and some other creators and stuff. I kind of just ignore that stuff. So I remember reading them at the time, but I don't really remember what the deal is with that. But when people talk about their haters a lot, that's usually a red flag to me. You notice that for me, I kind of want to be left alone from that perspective, right? It would probably be good for me if somebody was like attacking me. I've had situations where people have attacked me for really quite ridiculous attacks. I just ignore them. It's hard, but I just ignore them. That's what's worked best. And I say, like, I was watching, so there was a thread on Reddit yesterday that was like, it was about Humbled Trader, because she was, at the beginning of the pandemic, she was super popular, right? But now everybody's turning on her because she's got the marketing team and they've got the course and they push that really hard. And now everybody's calling her a charlatan, which I don't know if that's necessarily fair, but I'm not a fan of her anymore. And, so people were talking about all their YouTube channels to go and watch, and nobody mentioned me, which is what you don't. The first rule of Fight Club is you don't talk about Fight Club. So you guys all passed that time. Nobody mentioned me. Okay, so Andre, yeah, that makes a lot more sense now. So far, I haven't had many instances with the FCM. Started trading a few years back with crypto where I believe no one knows about this. Yeah, this is a future specific thing. And you will basically never interface directly with the FCM, right? It will always be through your introducing broker, basically. From there, use Top Step for this, where again, I haven't got much info about the FCM, so this made everything much more clear. Yeah. It's entertainment and everything can be shady. Stupidity exists. I use Rhythmic. So the reason I use Rhythmic is twofold. One, I prefer to have more than just the 10 levels up there. I should probably adjust my DOM so that I show the more than 10 levels. But you get more levels of depth, and some of my indicators have found some useful things about seeing that stuff so far away, right? Also, if you use Rhythmic Trader Pro, there's a plugin mode that basically allows any native C# application to plug in and get data from that. So I can get my data into NinjaTrader and Jigsaw all through Rhythmic Trader Pro. And that's a good way for me to forward the data. And that's how I'm able to have this really complicated setup that lets me use NinjaTrader and Jigsaw together. Now, to do that, I have to do funky things with the license. And so I'm now on an older version of NinjaTrader, and I'm not using my developer license. I'm using a free license because I don't want to use NinjaTrader as my broker. And probably eventually I may just be forced to ditch NinjaTrader entirely, which will be really sad, but that's the way that they're going. So it's a really weird setup is what I'm saying. MotiveWave is cool. We were doing stuff with them the other day. Oh no, it wasn't MotiveWave. It was the other one. I forget their name. Anyways, oh, I didn't thank Sean for the $10 donations. You guys don't have to donate, but it always feels good when you do. So I really appreciate it, dude. You're on Linux with zero charts. Oh, okay. Yeah, it was ATAS was the other one. Yeah. I still need to get in because I wanted to program with that, but I just haven't had the time, I guess. Which is because they were really cool, I gotta say. Like when they reach out and they'll come on the stream sometime and stuff. The guy that we were talking to seemed really cool. I tell you what, not everybody in the industry is cool. There's some real asshats out there, like people running platforms and stuff like that. or guys that are just like that's one of the things that kind of has me a little bit like about Sierra Charts is it seems like there's one of the engineers over there is just like an absolute right-wing libertarian quack, thinks that the world is going to end now and uses that to justify not doing certain features. It's like, okay. Right, the rants can go on there. It is yeah, the kinetic war guy. What the that was like what, a week ago? Was that last week or 2 weeks ago? I'm still like, what the F is going on? That was such a weird comment. The thing that I'll never understand is how the kind of person that believes that sort of thing, that thinks that like the world is going to end or that kinetic war is inevitable or these sorts of things, that they can be so confident about it, you know? It's really wild to me, but because my whole thing, one of the kind of like the personality quirks that I've developed over my life because of ADHD is that you don't really trust yourself, right? Like, that you will say, okay, we got the whole afternoon, I'm going to work and I'm going to do X, Y, and Z. And then you just watch TikTok. Nothing happens, right? It'll happen to me all the time. As I've gotten older, I've gotten really good. And I feel so productive in my late 30s. Like since COVID, it's really started to get into like crazy levels because I'm working so hard at my day job. They utilize me so much more than the place that I worked before that. And then I'm getting all this work done on my house and the desk and building things and all of that on the weekend. Yeah, I'm getting into hyper productivity, I feel like sometimes. But sometimes I don't get as much done as I want. Or I'll make a conclusion on something and I'll have just missed like a really stupid detail that everybody else catches except for me. And so you just learn over time, like it really gives you weird confidence, because I know that there are so many situations where I know things or I understand things that nobody else does, but then I'll make a bad call that will like just completely undermine the confidence. And so you don't trust yourself, and you don't come in and say, well, I think that Donald Trump is going to win the presidency. Well, I've been at this long enough that I know that I'm probably not able to make that kind of a prediction. You know? You don't have that kind of confidence in yourself. So when I see people that are predicting things that are just really wild and crazy, I'm like, how can somebody like that be so confident about it? Because you got to be just really stupid to be that confident about something like that. Is what I think. Divergence in bonds, yes. So, you asked me a question about that earlier today, and we didn't get into it because of the news, but we got about 20 minutes left, so let's talk about that. So, the spread. This is the spread, okay? And the way that you need to think of it is up is steep, down is flat. Okay, so if the chart is going up, that is steep, and if it is going down, that is flat. So what are we seeing today? We are seeing steepening. So based on the direction of the arrow, that tells you which one you buy and sell. So if the arrow is up, that means that you buy the front month and you sell the back month. Right? And if it's flattening, it's the other way around. It's you are excuse me. You're selling the front month and buying the back month. Right? Now, this is where it gets kind of interesting, because the bonds, the direction of the bonds that we're going, that whether we're going up or down, is independent of whether we're steepening or flattening. And so you get 4 scenarios, right? There's the bull steepener, the bear steepener, the bull flattener, and the bear flattener, right? And they all kind of, now you could go and you can read about the different things that they mean and things like that. But if we are getting steeper and we are moving up, what that means is that the 5-year is going to go up a lot more than the 10-year does, right? The 10-year will kind of only go up a little bit, but the 10-year will go up a lot. And then that's steeper, right? So what that means is, if I'm going to be in a trade, I would probably rather do it in the 5-year, right? I'm probably going to make more money if I do it in the 5-year. Now, I don't like to switch instruments, right? But that kind of does tell me something, that it's like, okay, the 30-year is kind of more on the long end of the curve. So if I think that we're going to steepen, I kind of am a little bit more interested in the sell than I am the buy, essentially, right? Because if I buy, the 5-year is going to move more. If we sell, the 10-year is going to sell more than the 5-year, right? You still got, see how it's still steeper, but the long end, the 10 and the 30 will sell more. So if we were going to sell, I have a better trade in the 10-year, right? And so I can kind of use that to both interpret the flow and guess my take profit a little bit more. Like in this situation, I only got 10 ticks out of it. Probably could have gotten 20, but that would have been really tough. And if I had held on, if I was still in the market right now, I would actually be a little bit underwater right now. No, it wouldn't be underwater because I got 3-2. I got 3-2. but they're retracing the profits, let's say, right? So I knew that because we went up, you know, I wasn't going to get like a $40, $50 winner. I was going to get like a $10, $20, $30 winner. And so I took the profits a little bit earlier, probably earlier than I should have, but it was still, I played that really, really well. But then another thing is that, you know, I'm going to come over here and when I'm watching the treasuries over here, right? If it's steeper, right? If it's steeper and we're moving up, okay. And then over here, I see in the treasury some really aggressive selling in the 30-year, right? Well, normally seeing really aggressive selling is maybe like, oh, maybe there's a meta order. Maybe that's going to push us down, et cetera, et cetera, et cetera, right? But I know that the spread is buy the 5, sell the 30, right? It would be the same thing like I'm seeing buying, but there's a huge iceberg there. Why is there a huge iceberg there? It's because of the spread, right? So I can interpret the DOM a lot more accurately if I have all of these up and I understand which way the spread is going. Otherwise, you will see some of these aggressive orders, especially in the 30 and the 5, and they will give you false signals because you don't understand that they're only happening because of the spread and they're not going to actually really drive us from an outright perspective very well. Now, I feel like I gave a really, really good summary there. I'm feeling really good about this. I guess this is because I have a good day. You know, I got a winner and everything, and that kind of helps you. You know, it helps me speak more clearly. But because of that, I can try and go into something a little bit more advanced, and that is convexity. So you will notice here that on the DOMs that we have up right now, we have fallen back. So we are steepening, and we are moving down because, and not necessarily moving down, but like we're pulling back from those highs, right? So what are we seeing? The 30 has sold more than the 5. I place these treasuries in the order that I do, with the 30 on the left and the 5 on the right, so that again, up and to the right is steeper, right? That's also why when I have the micros, it's the opposite direction, right? I have the 2 over here and the 30 over here, so that it's the same thing, so that up is steeper, okay? But in this situation, the 10-year has not moved as much as the 30 and the 5. Isn't that curious? So sometimes there can be kind of some convexity to it, where it's like, if you look at the yield curve, there's like this bump here on the 10-year and on the 20-year, where like, actually it's the opposite. It's like this, and then there's a little dip there, and there's a little dip there, right? Because for some reason, they're more likely to buy the 10-year than the 20-year. The 20-year because it's special at auction, and the 10-year just because it's like the most popular, I guess. And everybody knows it. So in this situation, that can make the flows really hard to read, right? Because the flow is not really coming into the treasury, and if I'm only watching the 10-year, I might not see. So let's come back over here to the chart now. Right? Well, the treasury did buy here, right? But then since then, it's kind of been flat, versus the 30-year has just continued to sell, and the 5-year has just continued to buy, right? Or another way of putting it would be that you're seeing the spread still kind of moving up in this one, but the 2 and 10-year spread didn't do the same stuff, right? So the way that you take advantage of these trades, I've never really done this, but the way that you would want to take advantage of this one would be if I had sold the 5 and the 30 and I had bought the 10, and they call this a butterfly. Okay. So my indicator can also show you a butterfly, and I'll show you how to do that. Because that's what the question was about, the, you know, how do you use the spread? So if I come in here to the indicators, and I just use the spread indicator, there's older versions of it that had like spread candles Spread multi, I think, was spread before I like renamed it. But anyways, you want the one that's just called spread. There will be this parameter here called number of legs. So you could change that to 3 legs, right? And now you can do a butterfly. You can also change the chart type from line on close to candles so that you can kind of see the range that they went through. I don't really mess with that too much for this over here. Probably could do candles though. There's also this gray historical bars because from a historical perspective, it can be kind of hard to see what the actual spread was, because when this one is at its high doesn't necessarily mean that this one was at its lows or at its corresponding high. You know, they don't always completely match up. So that's where some of the complexity in this indicator comes from, but you don't have to worry about that because the indicator worries about it for you. So that's how you use it. You put it on there, and I have here leg 0, leg 1, right? Leg 0, ratio 0, leg 1, ratio 1. So the spread in this case is ZT, ZN. So the front month, leg 0 is ZT, and the back month is leg 1, ZN. I always do the short-term treasuries are always the front month, right? So like if it's the 10 and 30, then the front month is the 10. And then the ratio, to get the ratio, we come back over here. If I just go on Google and I search for CME inter-commodity spreads, you'll come to this page, which will show you the ratios. So the 10-30, the 10-year T-note versus the T-bond. T-bond is the 30-year, is 5-2. So then I set ratio 0 to 5 and ratio 1 to -2. And that's how you get the right ratio and put it in. And then it figures out which month to use and all that stuff on its own. That's one of the advantages of my indicator versus what you could go and download for free. So if you download it for free, then every month you have to go into the indicator and update them to push them over to the new month, which is a pain in the butt. And I think that's just about everything to tell you about spreads. Other than actually trying to trade them in strategies that would be specific to spreads, I don't know a whole lot about that. I'm trying to find information and I just haven't found it. I know generally what will cause steepening and flattening, but I haven't found really good technical information about it, about when would be a good time to put trades like that and stuff. Okay, so treasuries have retraced this quite a bit. The S&P 500 definitely has retraced it, and in 10 minutes we'll have Jerome Powell speaking. So again, warning, the chances are that Jerome Powell will be a little bit hawkish, and what he's probably going to say, is something along the lines of, well, we expect to pause for a while, but then after the pause, we anticipate that it will be another hike and not a decrease. And the market won't like that, just like they didn't like it when the New York Fed president was saying that yesterday. Was just that there was end of month buying that kind of counteracted it, so the treasuries weren't hurt as much as they probably would have been otherwise. So that's a big risk if you're in positions you won't want to think about and consider. Market will probably move on his comments today. All right, is there anything else we want to get into? We got about 5 minutes. What's he gonna say? Close the effing door. Yeah, I hope he does. I hope he does. Wouldn't be surprised if the interviewer asks him about that too. I thought that was that event propels Jerome Powell into an S tier Fed president in my mind for sure. For sure, he's S tier now. You weren't here when we were talking about that, were we? Actually, like, remember a couple of months ago where we had like the tier list? And we were like, well, maybe if Powell pulls this off and we do get a soft landing, then you could say that he's an S-tier Fed president. But when he said close the effing door, that propelled him into S-tier. How do you compete with that, right? Alan Greenspan's got nothing on close the effing door. Alan Greenspan is just a nerd, you know? But Jerome Powell, the Chad, close the effing door. Love it. So funny. it was a little, what's the word? Disorienting to see him so unguarded too. Like, you know, the microphone's right there, dude, right? He said it. He said it. I'm glad he did, but man, wow. What a gaffe. What a gaffe. It's almost as bad as when Obama said to his Russian negotiator guy, you know, after the election, I'll have more flexibility. Oh my gosh. I can't believe that that didn't destroy his campaign. I at the time, I thought when that happened that that would seal Mitt Romney winning, but apparently Mitt Romney is too boring. You can only imagine what the world would be like if Mitt Romney had won the election rather than Obama. Oh, man. Well, I thought that they were coming back down here, but this is another good 5-tick rally there. See, so now they're like, hey, Seth, if you want that other $10, you could go for it, I guess. Nah, I don't know if I really want to take a trade on the hopes that they'll make it a new high, especially with Jerome Powell speaking here. Because that could be really wild, right? Well... Looking around here just to see anything interesting here before we leave. Got like a minute or two. Yeah, looks like the Jigsaw Black Friday sale has ended. No, don't really have anything. So what was that ticking? S&P doing something funky there at 77.5 and 76.75. Huh. So there's some big orders right there that are doing some funky stuff. Somebody, I wonder if maybe that could be somebody trying to build a short position before Powell. I mean, if I was going to make a gamble here, I think it would be short SPOOs. Yeah. But who knows? Definitely not confident enough in that to put money on it right now, right? So U.S. manufacturing survey signals stagflation. Prices paid up as jobs drop. Yes. Presidential DeSantis dominates debate with Glib Newsom, but watch out, he's coming. Yeah, it will be fun to see people fact check that. Hey, if you're into politics, go watch that debate. It was a real mess. It was entertaining. I enjoyed it. In fact, I think what I will do, after doing all my stuff for the morning, is to go around and read what people have to say about the Newsom DeSantis debate, because I was definitely entertained. But see you guys next week. Good day today. In the meantime, stay excellent.